Hi, and welcome to the weekly update. Today is October 12th. So, wanted to share a few quick things about what's going on in our market. It's definitely an interesting place to be here in New York City, and I'm going to jump in and share with you some information. First of all, what is going on from supply and demand perspectives in our marketplace? We have right now 7,552 apartments on the market for sale. And if you look at this chart over here, you're going to see that this is normal and seasonal. So this is this year where we're at, and if you look, it compares to where we were in 2021. So nothing really noteworthy to say, nothing scary in any way. You don't see people flooding the market to sell their home because they're scared that rates have gone up or things like that. Just going along in a normal, non-eventful way, which is a good thing given on what's going on out there in our market. But what about contract signing? Well, from a contract signing perspective, there are currently 2,814 properties that are in contract. And as you see over the last few months, it's gone down, but also in previous times, it has gone down as well. The big question is what's going to happen in November when people start signing contracts, because October, November is when people start signing contracts. So the overall number of properties in contract, they should start to go up. And if they don't, well, then we're going to be seeing that the macroeconomic forces are having an effect on our market. Now, something very notable and something new for us is we are now officially in a buyer's market, very marginally so. As you can see, this strip over here represents the buyer market, and we are just now just getting to the tip from neutral to a buyer's market. And this is all based on what we call the market pulse, which is the barometer, the measure of who has leverage in this market. In other words, if a lot of people list their property for sale and nobody's buying, very few contracts get signed, well, there just becomes more and more inventory, and buyers have all the choice in the world, and sellers are begging for buyers to buy their home. But the reverse is also true. If a lot of buyers, if they go out there and they buy property and not a lot of listings come on the market, buyers run out of options. And of course, now the sellers are in a stronger position. So that is what the market pulse is. It's measuring. And as you can see, over the last few weeks, the market and the last few months, even the market has been slipping towards the buyer's market territory, and we are now officially in the buyer's market. Once again, this is all relative, right? So is it a good time to sell your property? Yeah, it's still a great time to sell your property. There's plenty of buyers out there, but relatively speaking to last year, yeah, last year you could have sold your property with multiple bids in a lot shorter period of time. While to now it takes a little bit longer to sell your property, and you definitely have to be open to negotiations to get a deal done. Now, if we look here, the big question is what's going to happen in the future. Now, normally October, November, as we were saying earlier, contracts get signed. The total number of properties in contract get signed. So sellers take back leverage because their properties all get sold and buyers run out of options again. And if you look over here in past years, at this point in the year is where you start to see this change, and the market pulse goes back up into seller's market territory here again. So are we going to have the same thing where we go back into seller's market, or are we going to continue a decline? That is a big question. That is something that we are definitely watching very, very closely. Looking at the last week in specific, because this is, after all, a weekly report. Well, this past week, the number of listings that came onto the market is just following what normally happens every year. Once again, nothing noteworthy. No more properties being listed in general now than are listed in other years in the prior past. To be more specific, 412 properties got listed. That's 5% more than last week, but that's what's normal this time of year of what happens. But what is notable is contracts signed. 161 contracts got signed this past week. That is up 3.8% from the week before. We like to see that. That means more buyers are signing contracts. Now, if that trend continues, then great. We are going to be making that curve up, and things should go well with us on that market pulse, going back out of buyer territory into seller territory. But it all depends on what's going to happen with those contracts signing. So that's something that we have to see. And to explain that a little bit further, this chart illustrates for us the market contract activity, meaning every month, how many contracts get signed over the years. And this is where we are right now. And right now, we've seen a decline in the number of contracts getting signed. That is what happened in prior historical years as well. But there's an inflection point. You now have October, November, where contract signings go up. And so the big question is, are we going to go up or are we going to stay the same and go down? If we stay the same or go down, we are breaking from the historical norm, and you should expect there to be more negotiation. You would expect the seller to have to negotiate more to get a deal done because we're having less deals happen than we normally do at this time of year. And buyers know that and feel that. And you may see price adjustments if that happens. That's a big question, a big if. So hopefully this gives you an idea of what's going on. I'm going to give you a very, very quick summary of it. In short, if you are a seller and you want to sell your property, there are plenty of buyers out there and deals happening every single day. I'm putting properties into contract and getting offers all the time, but you have to know the market that you're in. You have to be willing to compromise to get there. And it's very important to study the comps and to chat with me about it. And if you're a buyer, this is a great opportunity for you to go out there. You have a little bit more time to make a decision. Last year, you may recall, if you were shopping, you went out to buy a property and there were 5 other people competing against you, and you had to make a move really, really quickly. While today, you may have more time to make that decision. As I said last week, marry the property, date the rate. So the rate is now higher than it's been. It's a dramatic change. Hopefully, that will go down at some point. So buy a property, you can always readjust your rate in the future should the rates go down. And lastly, when you look at the actual rates, the rates have gone up so much in the recent past. It's just gone up significantly higher than we have ever measured in terms of this rate increase. And I'm looking back over a decade. So a very important thing to realize: the rates shot up. There's likelihood that the rates may go down eventually as well when the Fed decides that certain things in our economy gets fixed and inflation gets under control, and eventually the change in the federal funds rate will trickle in and most probably have an effect on lower rates in the future. We will see what happens. We will track it daily, and I look forward to sharing this update with you next week. But most importantly, if you want to get more granular data about your property, if you want to get more granular data about a neighborhood that you're searching in, more specifics, please give me a call, send me a text, shoot me an email. I'm here to talk to you, and I look forward to it. Thanks so much. Bye.